Good morning, good afternoon, good evening, everyone. Welcome to the 56th Emerging Growth Metals, Mining Resources, and Energy 2.0 Conference. I'm Anna Berry, your host today. Today, we will be running until about 4:40 Eastern Time. And just a few notes. So when we switch to the next company, you're going to see a black screen for a brief moment. Don't go anywhere. It's just us moving over to the next presenter. If you experience downtime for more than a minute or two, refresh your browser and everything should work properly. Our platform does work best on Google Chrome, so if you're watching from an Apple device, you have to hit the play button to start the session. Now, all of our conferences are uploaded to our Emerging Growth Conference YouTube channel. Subscribe there, youtube.com/Emerging Growth Conference. And during each company's presentation today, you, our viewers, can submit questions through our webcast module, and we will attempt to address as many of these as possible at the end of the presentations. And one last note, after today's event, you'll be redirected to the registration page for the next conference. So stay on or come back to reserve your spot early. Let's begin. Starting with Giga Metals Corporation, trades on the OTCQX under the symbol HNCKF and on the TSXV under the symbol GIGA. It's focused on metals critical to modern batteries, especially those used in electric vehicles and energy storage. The company's core asset is the Turnagain Project, located in northern British Columbia, which contains one of the few significant undeveloped sulphide, nickel, and cobalt resources in the world. Giga Metals has formed a joint venture with Mitsubishi Corporation to advance the Turnagain Nickel Cobalt Project in Canada. We are happy to bring on the CEO and chairman today, Mark Jarvis. Nice to see you today, Mark.
Well, very nice to see you, Anna, and thank you for that kind introduction.
All right, the floor is yours, and call me back when you're ready for questions.
Okay, well, I will just put up the slides and get going. So this first slide, I like it because it shows the terrain very well. That's our camp. You can see we've got a 1 kilometer airstripper right beside the Turnagain River. But this is northern BC, but we're not in the mountains. This is rolling foothills terrain. So it's perfect country for open pit mining. And we are designing an open pit mine. Also, in terms of road building, this is quite easy road building terrain. Here's our standard disclaimer. So you mentioned Mitsubishi Corp. This happened in August last year, and it was a transformative transaction, as it says here. It's also validating. Mitsubishi Corp is, a very large Japanese company. They are the largest commodities trader in Japan. They know the mining space very well. And what they like to do is get a minority interest in a project, and then they help to get the project built. They don't want to operate. They primarily want the raw materials, either for their own purposes within other divisions of the company, or for their trading arm. And that's their model, and they've done it successfully. They've got mines all over the world that they own 20 to 25% interest type of thing, operated by mining companies, and they're very happy with that model. But they also know the mining space very well. They've got an internal capability to analyze projects. And my understanding is that they looked at 26 different nickel projects around the world before settling on ours. So I find that extremely encouraging, extremely validating. They think we're the real deal. Also, what was important to Mitsubishi Corp is that our project has a real possibility of being a net zero mine, net zero carbon. We are already very much at the low end of carbon intensity per unit of nickel, but we have a real shot at getting carbon neutral, and we'll get into that a bit more later. So what we modeled in our PEA, and we are currently updating that to a pre-feasibility study, a much more detailed engineering study. We modeled a 37-year operation, so very large, and averaged 33,000 tons a year of nickel. So this is really a giant project. And all in, the cost that we modeled, the CapEx was $1.4 billion US for stage one, and then another $500 million to double production in later years. So very much a giant project. And we are fully funded to complete our pre-feasibility study. We're targeting July of this year. So this is coming right up. BC is a very active mining jurisdiction. We have strong ESG practices. We are located in the joint territory of the Tahltan and the Cascadena. Both groups, both First Nations groups, are business friendly, and they're supportive of responsible mining development. They're doing very well at it. The economy in the north is booming. Here's our most recent mineral resource statement. We've got 1.5 billion, that's a B, billion tons of nickel and cobalt. It contains, in the measured and indicated category, again, 7 billion pounds of nickel. And so this is a giant resource. And then in the inferred category, we've got almost as much again. But it's the measured and indicated category that really count for now, because in a PFS, as in a definitive feasibility study, you can't use inferred resources. It's measured and indicated are the gold standard. And so that's what's going into our pre-feasibility report. This tonnage will give us a mine life in the pre-feas of approximately 40 years, plus or minus. I don't have all the details on that yet. And the interesting thing is this deposit is completely open. We think of the prospective ground that we've drilled 20 or 25% of this resource. So there's a real possibility. I mean, you can't, claim it until you prove it. But we've got drill holes that are 5 kilometers away from the resource that we've defined within that blue line down at the bottom. We've got drill holes 5 kilometers away that are quite similar to what's inside our resource. So we just think if you just keep stepping out, you're going to keep getting more. But so this could be a multi-generation mine. One of the strengths and one of the things that attracted Mitsubishi to our project is the simplicity of the processing. This is a simple sulphide mine. 99% of the nickel and cobalt are contained in one mineral called pentlandite. And so it's just crush it, grind it, froth flotation. These are all old tech solutions. They work again and again. When you're spending over $1 billion to build a mine, you want to have some confidence that your technology is going to work. And this is all old tech. This is very similar to copper porphyry mining, where you've got large, low-grade copper deposits that you mine in volume via open pit. And this is very similar to that, both in mining method, in comminution, and in the froth flotation technology to recover a concentrate. It makes a beautiful concentrate, and this concentrate we will model selling to a smelter. But you could also take this concentrate. There's any number of processing routes you could use. A pressure oxidation circuit would take it directly to a chemical form, either MHP or sulfate, that is directly on the path to the cathode. So it would be a more efficient path to the battery. And by the way, we have an incredibly low strip ratio, 0.2 to 1 life of mine. This is our concentrate. It's a beautiful product. very, very low in deleterious elements. Some of them you can't even measure. And this is a product that any smelter would compete for. And it's also a product that lends itself to, hydrometallurgical solutions such as pressure oxidation to create, as I say, chemical forms of nickel that are more directly on the route to the battery. And this is a summary of our PEA. We can produce nickel for $2.81 a pound in concentrate at the mine gate. And this is our projected yearly metal production. So again, a giant operation. There are years when we get to 45,000 tons a year of nickel. Now this map here is already out of date, but it just shows the gigafactories that have been announced in North America. And they're building all these gigafactories, but I'm not clear on where all the nickel is going to come from. Just for the gigafactories that have been announced, there's somewhere between 250 and 450,000 extra tons per year of nickel required for these. And the proportion of, how much nickel is required is going to depend on how many of these factories are LFP and how many are nickel-based chemistries. LFP, lithium iron phosphate, is a very good, electric vehicle battery technology that doesn't use nickel. However, it's heavier and less energy dense. And so it's a great technology, but you will never get the range that you get with a nickel-based chemistry. So, if half of the new batteries are LFP, then you need 250,000 fresh tons a year. And again, this map's already out of date. So I don't know where all the nickel's going to come from. These are the projects that are known. And of these projects, we are the largest that is targeted to the battery business, to class 1 nickel. So all of the green projects have engineering that model production to the class 1 market. The ones in blue are targeting production to the ferro nickel market, in other words, for stainless steel. They produce a product that is a mixture of nickel and iron, and that's perfect for stainless steel, but not for batteries. Now, all these projects could ultimately, and in fact, I think they ultimately will be battery projects. They'll be built to supply the battery supply chain, because that's where the growth is. So a lot of nickel comes from Indonesia, as you may be aware. And I don't think that people are really aware of what the environmental costs are of that. We're about like, an open pit mine. So you've got, there's always an impact with mining. And an open pit is a great big hole in the ground. However, the environmental impact is limited because you're going deep. These laterite mines, where they get nickel in Indonesia, are strip mines. So it's a thin layer, maybe 10 meters thick, right at surface, and they just take out all the dirt and they take out everything on top. They're quite often just ripping down tropical rainforests, complex ecosystems to get at the nickel. And this is growing and growing, and I don't think the world is fully appreciative of the environmental destruction that's happening in Indonesia to chase the nickel. Certainly, they don't have the kind of environmental standards that we have in Canada. So they're just merrily going at it. Now, by the way, they process this into class 1 nickel using a technology called high pressure, high temperature acid leach. And the acid is sulfuric acid. And then in many cases, they're dumping their tailings directly in the ocean. So this environmental story in Indonesia, I don't think has been fully told. I think it will be. And, yeah, I guess my message is if you think you're saving the world by driving an electric vehicle, you need to pay attention to where the raw materials are coming from and how they're being acquired. Also, our economics are actually superior to an HPAL project. We haven't been built yet, and HPAL projects have been built in Indonesia. I think the real reason is that you can get a permit to build a mine quite quickly and easily in Indonesia, and it's more difficult in Canada. And so that's uncompetitive in pure economic terms. In ESG terms, it's quite competitive. So we'll see what happens. I think all this nickel is going to be needed, and we think our project is going to get built in this commodity cycle. So we're already very low in a carbon intensity. This is from our PEA. This is the calculations from our PEA. Sulphide deposits seem to be just less carbon intensive than laterite projects. And if you start looking at nickel pig iron and converting the product of nickel pig iron to matte and then moving down the line towards batteries, it's incredibly carbon intensive, in addition to being environmentally destructive. So we've got a path to carbon neutrality, and it's to do with sequestration of CO2 from the atmosphere in our tailings. Bottom line is, including the sequestration, which I'll get into a little bit, we can get to carbon neutral. We haven't proven that yet, but we're supporting a lot of research at the University of British Columbia. Professor Greg Dipple there has been studying this for years. So basically, a silicate mineral will absorb CO2 from the atmosphere and convert to a carbonate mineral. The CO2 exists now in mineral form and is there for geological timescales. So, it's not stored, it's sequestered, it's gone, and it's quite interesting. This is where our tailings will go. It's actually a perfect setup for a tailings management facility. And this is what it looks like from an aerial view. So we're building it with a small pond and large beaches to maximize the CO2 sequestration, which, by the way, you can measure. And so we think ultimately we'll be able to get carbon credits for this. No, I haven't put any dates on this timeline because it always depends on when you get the money. And so we're working on a PFS. And once it's done, we're talking to strategics that have signed confidentiality agreements with us. We're talking to battery makers, we're talking to car makers, and we're talking to major mining companies. And they're all in our data room, they're all digging around, and they're all waiting for our PFS to be published, which again, we think is in July. And so when that PFS gets published, I think that's when things really heat up in terms of these discussions we're having. We're looking to sell another 20% of our project. We're not looking to sell our stock. It just makes a lot more sense to us mathematically. The shareholders will take less dilution if we dilute the project rather than the stock, because our market capitalization, in our view, is way too cheap. So, but these are the various steps. On our board, I'd like to point out or highlight two of these individuals because of our focus on getting strategics in as investors at the project level. One is Martin Vidra. He's a president and director. He spent a 31-year career at Sherritt. He's an engineer by training, but he spent a lot of his career selling nickel and cobalt products to end users. So he knows everybody, and they all know him. And he is leading our internal process to secure the next strategic investor. Bob Morris, 2 weeks before he joined our board, he resigned, or pardon me, retired from Vale, which is the giant Brazilian iron ore company that bought Inco, the big Canadian nickel company, back in the last market cycle. So they've got a giant iron ore business and a very large base metals business. So Bob was in charge worldwide. He was in charge of marketing copper, nickel, cobalt, and precious metals to end users. And that was a portfolio ranging between 5 and 8 billion a year, depending on commodities prices. So we've got 2 people on our board that the strategics know very well and have done business with for years. And we're running our internal process. I don't think there's anyone in the world that can compete with us for the team we've got to run that process. Here's our market capitalization. You'll notice we've got a couple of series of free trading warrants out there. So there's many ways to get involved. Again, our market capitalization is far too low in our view. And so, I mean, that just creates opportunity. And I guess that what I'll do now is, how do I don't
Are you ready
know how
for
to
questions, Mark?
Yeah, I'm ready for questions. I'm trying to get rid of the presentation here.
I think we see you. I think we're good. Yeah, let's start with some questions. We got a little bit of time left.
Okay.
So talk a little bit about, is the PFS your next big catalyst, and what's your plan after the PFS is published?
Yes, the PFS is definitely our next big catalyst, and again, it's in July. We anticipate, and it is a much more detailed level of engineering from our PEA, and it's going to be an important catalyst because so many people, so many potential strategic investors that we're talking to are waiting for it. They really want to see this PFS to really understand our project. So it's a huge catalyst for us, and the next step after that will be to find the next strategic investor. We're looking for $50 million because that's what it will take to get from where we are to a construction decision. And that includes the environmental assessment process. That costs money as well.
And Mark, how are those conversations going? Is there any interest?
There is a lot of interest, and it seems that there's more people all the time that we're talking to. There's companies that have approached us that I'd never even heard of before, and then you find out that, well, they're from Chile, or they're from Spain, or whatever. The companies I've never heard of that are multi-billion-dollar companies that are looking to get into the nickel space. So yeah, I would describe the interest as very high. If you think about it, if you're a car company and you want to be in the electric vehicle business, and you do want to be in the electric vehicle business, well, 10 years from now, if you don't have a secure supply of nickel, you're not going to be in the electric vehicle business. So that means you may not be in business. And so I think from the car company's point of view, they're reaching the point where they realize that they're facing an existential issue. And some of them are reacting faster than others. Some of them have got whole mining teams that they've hired to start sorting through projects. So yes, to answer your question, interest is very high.
Good. Now, Monumental, working with Mitsubishi, that must be what an experience. Talk a little bit about how that relationship's been going lately.
Well, I absolutely love the Japanese corporate culture. They do what they say they're going to do. It's very honor-based, and I very much like that. very detail oriented. They don't just write a check and walk away. They are following every step of this PFS process very, very closely. And in fact, when they did the due diligence, I would describe the level of detail of their due diligence as exquisite. But they're also just really nice people. So this team that we work with is the battery metals division that they formed within their raw materials division. And it's just people that I like. And boy, I sure like going to Tokyo and going out for dinner with them. It's pretty amazing.
I bet. That's good. Good to hear. So the whole market's volatile, but talk a little bit about the volatility with nickel prices. Is it continuing? Have they settled?
Well, I mean, we went through, a couple of years ago, we went through the big short squeeze in nickel, and that got extremely volatile. It settled down from that. However, nickel it's a thinner market than, say, copper. It's about 1/9 the size of volume of copper. And so it does tend to trade in a more spiky fashion. I think at the heart of it, the nickel market, people ask me, what's the price going to do? And for the next few years, I don't know. I mean, it could be slightly in excess. It could be slightly in deficit. But that doesn't matter to me as much as 5 years out, 10 years out, 15 years out. And I can tell you that if the electric vehicle revolution keeps going, it provides a fundamental shift in the nickel market. And, there's not enough nickel. And so there has to be a price reaction to that. We're one of the extremely large undeveloped deposits in the world. And nickel is already trading at a price that incentivizes construction of projects like ours. And I think there's upside from there.
Good. Thank you for that. Mark, are you going to be doing an equity raise anytime soon?
In a perfect world, I will never do another equity raise. I hope to get all of the money we need from strategics by diluting the project rather than our equity. That said, you can never say never in this business.
That's true. We have a question from Jassim Al-Thani. First of all, Jassim is thanking you for a great presentation, but can you speak a little bit about what's expected operating costs per pound in the PEA? And is it expected to be a lot higher in the coming PFS due to inflation and rising labor costs?
Well, I had a slide on that. I think the number was $2.81 a pound. Life of mine to deliver nickel in a concentrate to the mine gate. And then, of course, there's transportation. There's all sorts of things. There's smelter terms, or else there's the cost of converting via POX to sulfate or MHP. Do you expect prices to go up? Yes, of course. We're in an inflationary environment right now. And so both the CapEx and the OpEx, I expect to trend somewhat higher. On the other hand, the price of nickel has gone up more than the price of, more than inflation, more than general inflation since we did the PEA. So I expect the economics to improve.
And another question from Jassim, due to more secure supply and better environmental footprints like you talked about, do you see a premium for North American sourced nickel in the near future?
Boy, that is such a good question. And the answer is, I don't really know. I mean, people are making all the right noises about that. But at the end of the day, cost matters. And, but again, we, on a pure cost basis, we're very competitive with HPAL projects, which is where most of the nickel is coming from now for the battery business. Where we're less competitive is that it takes longer to get through an environmental process in Canada and to get your permits to build a mine. However, once it's built, our costs are competitive with HPAL, and our technical risk is much lower. So there may be a premium, or there may be tariffs on high carbon nickel production, particularly to Europe. One way or another, I mean, we've got what everyone needs. And that's why we strongly believe that this project is going to get built.
Makes sense. Carrie Harper wants you to talk a little bit about that Mitsubishi partnership and how that affects any timeline to production, sales, and a positive cash flow.
Well, it helps. I mean, again, all in, all stages. I mean, we model building this project in stages, but all in, we're around $2 billion US. That's a pretty heavy nut to crack. Mitsubishi, part of their group is a bank, and this is a bank that specializes in financing mine construction. So they just bring so much heft to the table. Plus, they bring credibility. And they're very interested in getting another partner into the mix. So they're bringing people to us. It speeds up everything, is the short answer.
Benny asks, what's the thought behind the financials of selling a percentage of the project and not the stock? Is it that the funds that come in will hedge the market cap to decrease in project ownership? Can you answer that?
Well, the thinking for me is it's simple math. I mean, I'm looking to raise $50 million as the next step, and because that will get us all the way to a construction decision, including the environmental assessment. And our goal is to sell 20% of the project for that. And to raise that kind of money with a stock with a market cap of $28 million Canadian, it just makes no sense to me. So we're not entertaining that. And, it's kind of, we're in a position where we can say, look, there's one way in, here it is.
And another question, it might be our last at a time, about financials from Eric Riley. He noticed your cash assets jumped about 500%. What was this due to? Was it an equity raise with stock? And if so, could that be the reason for the decline? Can you talk about that?
Well, I don't know when he's talking about, but our cash assets jumped when we did the deal with Mitsubishi. So that was not an equity raise. We haven't done an equity raise in a year and a half or something like that.
And so Rafael Ortega asks, does Mitsubishi contribute cash and infrastructure construction? If so, how much cash and what is their benefit? Is it a percentage of sales?
Well, they will contribute their share of the cash, of the equity towards building this, and they'll participate in their share of the debt. At this point, they've got 15% of the project. That's 15% of the project. And so they get 15, as long as they keep up with the spending, they will get 15% of the offtake ultimately. That's what they've got now. They could change that. They could improve that. They could increase their ownership of the project. But all of that remains to be determined.
All right, Mark. Well, we are out of time. It's been a joy speaking with you today. Great presentation. And we would love for you to come on again in the near future with some updates.
Well, thank you so much. It's been a pleasure to be here. And I want to thank everyone for attending.
Wonderful. Thank you, Mark. Have a great day.
Okay.
Okay, everyone, stay with us. We'll be right back with our next presenter.